And so it happened. On a sweltering day in July of 2025, President Donald J. Trump, a man whose relationship with technology is best described as enthusiastically typing in all caps, stood before the world and signed the Genius Act. Yes, Genius. That is genuinely the name. It stands for Global Entity for National U.S. Innovation in Stablecoins, which is the kind of acronym that sounds like it was reverse engineered by a committee that was paid by the word. The signing ceremony was a spectacle, of course. It had everything crypto executives who, just a few years prior, were being chased by the SEC, now smiling awkwardly next to a president who once called Bitcoin a scam against the dollar. It was a surreal tableau, a political fever dream made manifest on the White House lawn. The immediate aftermath of the Genius Act's announcement was pure, unadulterated chaos, but not the kind you might expect. Wall Street, an institution that typically reacts to government intervention with the enthusiasm of a cat being forced into a bath, was surprisingly intrigued. The stock prices of publicly traded crypto companies like Coinbase and MicroStrategy surged. Meanwhile, in the crypto markets themselves, things went from volatile to ballistic. Bitcoin, which had been steadily climbing, rocketed past previous resistance levels. Ethereum followed suit, with traders buzzing about the newfound legitimacy of smart contracts and decentralized applications. So, what is this monumentally named piece of legislation actually about? If you peel back the layers of patriotic branding and Trumpian showmanship, the Genius Act is, at its core, the United States' first serious attempt at a comprehensive federal framework for digital assets. It's not a single, simple rule, but a sprawling piece of legislation designed to bring order to the Wild West of crypto finance. The absolute centerpiece of the act, the reason for its ridiculous name, is its focus on stablecoins. The Genius Act creates a federal charter for stablecoin issuers, essentially treating them like specialized banks. They now face stringent requirements for reserves, audits, and transparency. Now let's address the elephant in the room. With all this new government regulation, you might have expected the crypto market to panic. And yet, the exact opposite happened. The numbers from this very month, August of 2025, tell a stunning story. The total market capitalization of all cryptocurrencies has soared, smashing through the $4.11 trillion mark. This isn't just retail investors gambling their paychecks. This is the result of robust, sustained institutional demand. Ethereum, the backbone of decentralized finance and NFTs, is flirting with prices that seemed like a fantasy just a year ago, with some analysts now projecting a potential run to $15,000 by the end of the year if these bullish trends hold. This is not the behavior of a market in fear, it's the behavior of a market that just got a massive dose of adrenaline. It sounds like a contradiction, doesn't it? The idea that government rules could actually help decentralization. Instead, it focuses on the on-ramps and off-ramps, the centralized exchanges, the stablecoin issuers, and the custodial services that form the bridge between the traditional financial world and the decentralized one. By making these bridges safer and more reliable, the Act inadvertently makes it easier and less risky for ordinary people and institutions to access the decentralized ecosystem. This regulatory clarity has a profound psychological effect on investor confidence. When people trust the bridges, they are more willing to cross them. A federally chartered stablecoin might seem like a sellout to crypto purists, but to a pension fund manager, it looks like a secure and reliable tool to move millions of dollars onto decentralized lending platforms. Now let's talk about the recent market jitters, because yes, after a period of euphoric near-vertical growth, the crypto market did hit a speed bump in early August. The bears came out of hibernation proclaiming, "See, we told you so, the regulation was a Trojan horse." It was a tempting narrative, an easy conclusion to jump to, except in this case it was also completely wrong. The real reason for the market-wide dip was the unveiling of new modified reciprocal tariffs. But the announcement sent a shockwave through all markets, not just crypto. The Dow Jones shuddered, bond yields fluctuated. This was a textbook risk-off event, where investors flee from assets perceived as volatile and seek shelter in safer havens like cash and gold. It shows that the crypto market is no longer operating in its own isolated bubble. It is now deeply integrated into the global financial system. So, we find ourselves in a strange new world. The crypto market is booming, the government is on board, and the old rules no longer apply. The first and most important strategy is to abandon the old crypto bro mindset of chasing obscure altcoins and hoping for a 100 times return overnight. The game has changed. This means prioritizing established blue-chip assets like Bitcoin and Ethereum, which have been effectively blessed by the new regulations. Diversification remains as crucial as ever, but it now takes on a new meaning. It's not just about owning different types of cryptocurrencies. A well-diversified portfolio containing a mix of stocks, bonds, and perhaps even commodities can help cushion the blow during periods of market-wide volatility. Finally, the most powerful tool for survival is education. Do not simply follow the hype on social media. Read the Genius Act. If the Genius Act was the legislative cornerstone of the new U.S. crypto policy, then the creation of a strategic Bitcoin reserve was the flashing neon sign telling the world America was all in. Signed via an executive order back in March 2025, this move was as audacious as it was logical. Unlike fiat currencies, which can be printed into oblivion, Bitcoin has a mathematically enforced, fixed supply of 21 million coins. The executive order explicitly recognized this, stating that there is a strategic advantage to being among the first nations to create such a reserve. When the world's largest economy officially classifies Bitcoin as a strategic asset, it provides an unprecedented level of validation. The US government isn't just buying Bitcoin, it's fundamentally altering the global perception of its value, transforming it from a speculative curiosity into a legitimate reserve asset on par with gold. As we stand here in the late summer of 2025, the dust is beginning to settle, and the outlines of a new global financial order are taking shape. The combination of the Pro-Crypto Genius Act and the establishment of a strategic Bitcoin reserve represents a calculated and aggressive pivot by the United States. Now, the nation has made an audacious bid to not just catch up but to write the rules for the next generation of finance and become the undisputed crypto capital of the world. This new posture is a direct challenge to other global powers, particularly China, which has taken the opposite approach by banning cryptocurrencies while aggressively developing its own centralized digital yuan. The Trump administration is betting that an open, regulated, and innovation-friendly ecosystem will ultimately triumph over a closed, state-controlled one. By providing regulatory clarity, the U.S. is attracting the brightest minds, the most innovative companies, and the largest pools of capital in the digital asset space. The road ahead will not be smooth. There will be market volatility, political battles over the implementation of these new rules, and intense competition from other nations vying for a piece of the digital pie. But for the first time, there is a clear direction. There is a strategy. The United States is no longer reacting to the rise of crypto. It is actively shaping its trajectory to serve its own strategic interests. Whether this leads to a more stable and prosperous financial future, or a new set of unforeseen problems remains to be seen. But one thing is certain, the game has changed and America is now playing to win.